first thing, I think, Tyler, you were asking about SUV. So the thing about this is, you see the gap up right here to here. So it's already on our radar. Uh, Definitely low volume the previous day. I don't know what the news was and what the reason for the gap up was, but after the gap up, you see how it starts coming down, ramps back up, and your opening candle is right there. It starts to have green, kind of dumps, and what I suspect this opening little flush out is if you go, let's do 1 month. I'm willing to bet if you go far enough, you're gonna see some bag holders. Either that, oh, there are no bag holders on this. All right, then I'm willing to bet that's just early profit takers. Because things like this, after they run up, there are gonna be people that are gonna want to get out. So you have the opening dump, and then you see how it holds the pre-market area right here. That's when you can watch it, and if it reclaims the 1 minute 200 EMA, what you can say is you can get in on any of these green candles on the 1 minute, and your risk is a break of this area. Now, obviously, give it just a little bit more room than that, maybe down to about right here for people to stop hunt. And don't look at it as, oh, it can go back up off of my stop loss right here. No, if it hits, that's it. That's the whole point of risk reward being set that way. You know that you can set your reward to at minimum VWAP, and your risk is down here about maybe 565 or so, 560. So if you got in on, let's just say this green candle right here, 580, 585, you're risking 20 cents to the downside all the way up to VWAP. I mean, your risk reward is monstrous there. Once you see this halt, me personally, I would get out right after this unhalt. And then afterwards, you got the drop. And the thing is, this has two options at this point. It can either come right back down to your 200 EMA, and if you're still in or you have like runner positions, I would say cut if this candle right here was this candle that formed as a red candle and it started dropping down. Starts coming up, see how it barely takes out the halt level, comes back down. Halt level again right here, and then it starts ramping up again. So now you have one of these things where once it halts here, 2 minutes, I don't even think it was 2 minutes, maybe a minute and a half, halts again. At this point, it is time to scale out right around here. If you miss your exit, it is time to scale out here, here. I mean, even if you don't collect like the full amount that you can, it's time to get out. Now, if you're looking at when to get back in, see, at this point, I would say you've collected from here to here, and then VWAP if you re-entered to, and you should be scaling out at these halts. So you've collected from VWAP to here. Now, the other thing about this is that once you come out of these halts, especially, and I think Guy always says this, you have 3 halts, you don't know where this thing is going to go. 1, 2, 3, 4. If you're still in it, you're just increasing your risk unnecessarily. And the reason I say that is because the chances of it going from 10, what is this? $12 to $24. That's another 100% move from here to here. This is on top of a $100 move. Here's previous close line, this dash line. So it closed at, call it 507. Yeah, 507. So you're expecting it to go from 507, 100% move to 13. What's the top of this candle? 1472. So you just moved close to 300% here. Is that 300, 200%? Yeah. And then you expect it from here to go another 100%. That's unrealistic. If it happens, fantastic. But you shouldn't be exposing your profits to that much risk. Hang on a second. There we go. All right. So once it unhalts and tanks out, look at how much you've lost. From 1472 all the way down to 980s on this candle. Now on a knife like that, on a stock like this, if you sized in, taken some profits along the way, it might be worth a rescale here and get it on the get in back into the halt and see if it'll push. But I would be scaled in very small there. After that, halt again, halt down, halt up, halt up, halt up. You're playing with a very unpredictable stock right now. And my preference is, as delicious as this profit looks, I think they're easier stocks to play, less stress-free, less babysitting. Because you never know if this is going to open up or open down. And what happens, of course, up, halt down, halt up, halt down, halt down, halt down, up, down. Now, later on in the day, what I did notice is when the volume kind of pulls out a little bit, see, it still holds VWAP and it starts coming back up. This is another good area, an easy spot to play. Now, you also notice right here, there's no halt level. The only demand that you have is this one candle, and here's a supply candle. And you're looking at this on the 1 minute. So it's not like these things are strong. It's not like it's the strongest of lines. After that, after hours, I wouldn't really have touched this, but hey, it respected that same level right here. Went all the way up to 30s. I mean, if you're sticking around, then I guess you can play it. Me personally, I would not. Now, one of the things, and I haven't done this yet, you can draw the fibs from the morning lows to the highs and see where it ends up. Now, if you haven't played this at all and you drew these fibs from here to here after you saw this come back down, you can now use the 50% and the 61.8. You notice how the 50% comes really close to this candle, and VWAP. So I would say ideally, if you got in here, your 50% level right here, maybe just under that, that's your risk. So about right there, which happens to also be the unhold level right here. That's what I got for this one. I didn't play it. Like I said, this one is, I don't like playing tickers that halt this often. I don't know, Tyler. You got any questions on it?
Just
Anything you see?
no, the only thing that's tough is like out of the unhalting period or halt versus unhalt, and then looking at the volume to figure out if there's enough there to continue the play. And then, like you said, it respected, the retest and after hours for what was the high a day, consolidated there, and then moved up to that next level at 30 or so. But it's, I know neither of us were looking at it necessarily in after hours. It was a little later and we just weren't focusing, but it makes sense in retrospect, but it's tough to think about in the moment that that's going to come, because part of trading is figuring out what are the possibilities, like what are the next things that could happen, you know?
Yeah, I agree. The other thing I noticed is with how much this halted. I mean, I rarely see a MACD that's this dirty. Like it's very, the lines are, it's very jagged, and that in and of itself is something that I just don't like seeing. I know some people use the 3 minute and the 5 minute, and I think the problem with that is when you go into the 3 minute, everything looks so compressed, and you don't see the little micro moves. Like you see this halt, it's 1 bar. This one, 3 bars. Same over here. So yeah, it looks a little cleaner because the noise is gone, but really, when you see the difference between that and 1 minute, especially during the halt, the 1 minute gives you a much better view of what this is doing. You go to the 5 minute, I mean, the chart looks clean and the action looks clean, but it's not. I mean, I know there were 2 halts over here. You don't even see it on the 5 minute. 1 minute, yep, there's the halt. So some of these like higher time frames, I'm not I'm not gonna say I'm not a fan of using them. I do like using them, but I think going into the 1 minute is important for things like this one. Does that make sense?
Yeah.
Anything else you see on this guy?
Big thing that I noticed is like, maybe because it just recently came to, was it Nasdaq or New York Stock Exchange, but the volume on this was like nothing the previous days. Today, all of a sudden, just got like an influx of like volume. So I think that's what really like had a push. So I mean, using volume is kind of a little bit hard because of all the halting. But as long as the volume is somewhat consistent or increasing, that's usually the bull signal there. But yeah, I mean today was just volume out of nowhere for some reason. There was like I don't even think there was even news on this.
There's the volume bar. This traded. What did that trade? 40 million today versus 1.2 million, 1.4 million the previous day. And then it didn't even, like, there are days that it's like, what is this? 100 shares were traded on this day. 0, 0, 0, 200, couple K. Yeah, yeah, this is definitely a low float.
Yep. Yeah, the
Uh,
flow is 13 mil. So like the if it traded 40 mil, it rotated four
yeah.
times.
All right. So we move to AMC.
Sounds good.
We'll talk about AMC now. All right. Hang on. Sorry about that. Um, so AMC kind of let's start with like a 3 month chart. AMC is kind of making a little comeback. I know we played this long, all the way up, at least up these, and I think we may have scalped long here, but we started getting, we basically cut our positions into this. And then I know we played some puts. I want to stay here for this, and this breakdown, I know there was a lag that formed, or not, what is it, a trend? Let me draw it out real quick. Yeah. Yeah. I remember, I don't know if this was the exact chart, but I remember this breaking down, and after the breakdown, I remember playing, I know I played these. Yeah. Those look like the right dates too. Yeah. After that, I don't know. I felt like the range was kind of gone, but now it's kind of coming back. Formed a nice little base at right at about 30. A little bit underneath 29.5. And then afterwards, this was the big day that it really pushed up. And it's kind of been stuck in this range since. You have close to an inside bar here. This one is inside. These are all inside bars compared to this. I know that's not like the official definition of an inside bar, but it's all consolidation right here. So I don't really think there's any big moves like this one. Yesterday's bar couldn't get past past this big move. The high here was 48.2. The high here was 47.16. So that's what I'm personally looking for is a push to 50. And I think a push to 50, some of these whole numbers like 50, 100, they're psychological resistance areas, which is why I'm looking for that push to 50. So I think if you get the push to 50, either one, you have the break of 50, and then that's where you can start playing this range. Or you have a rejection of 50. Let's just take this line and put it at 50. And when you have that rejection at 50, you can start playing puts. And once you have that, the range on AMC is actually really good. Like today, what I see is kind of the same as yesterday, where you see you have this nice push up, but then it can't break that area. We go back, let's see if I can put a line right there. Yeah, so this line is, all right, so we can use this dash line. So this dash line, previous day's close, if you see what it does, right in the morning, right before it opens, it drops to it, pops up, and then immediately you see a little dive. Same thing, pops up, breaks the close, 200 EMA, just like I said with FCUV, 200 EMA on the 1 minute, very strong trend line. none of these candles can seem to actually push. They all have these high wicks, which typically means selling pressure. So this is one of those, if you're feeling, if you can take a little bit more risk, I would say you can start scaling in to puts or your short position, limit order right about here. I don't know what the puts are. We'll take a look at that soon enough. So once you see this and it can't break, you start scaling in short and puts. You gotta look at where you're gonna get out. And what I see after it couldn't push, and at that point, sellers are gonna look at this and say, okay, I gotta get out. Anybody that got in here, they're gonna want to get out. Anybody that got in here, they're gonna want to get out. They see that it's not pushing. It's a lost cause, and either you get out or you're a bag holder. Once this candle finishes forming below this, and the next candle is below the clothesline, there's your lower risk entry. And then again, it's the same thing like what I said. If you entered, let's just say on this green wick right here, 47.68. So let's just call it 47.60. Make it easy. Then you can risk to about right there, 47.86, high of day. Give it just a little bit more room, maybe right there, 47.95. So you're risking about $1.30. And then remember your range on AMC. Yesterday's low is right here, 44. You have a small spot of demand right there. Let's simply draw the boxes. So let's go with the first level. So how I draw these personally, and remember, we're not thinking that we have this area. I'm only looking at this area. So I'm starting from where it kind of bounced off of to where it pushed out. So right here, that's a demand area. Right here, demand area. Now, if I extend this, because when it comes down to it, demand areas are just like supply and just like support and resistance. Look left. This is former supply or resistance. Supply, 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 starting to break the supply area. So supply area now turns into demand, demand, and up, demand, up. Now, when you extend that box out here, now you're thinking, okay, this is the area that I'm looking for. So if your risk was $1.30 to the upside, your risk on the short side, or your reward rather, from 47.65 all the way down to 46. So that's about $1.65 to the downside. Not the most ideal risk reward. $1.30, $1.65. Not the most ideal risk reward. So when you're looking at this and you think about that, if your risk reward is 1-to-1, and this is another one, I chose not to play this one today. When you're looking at your risk reward, if your risk reward is 1-to-1, is it really worth playing? Now, The other thing I see is right here in this zone, you have a bunch of consolidation, breakdown. Now this is good for a scalp. Comes right back. You can now start adding shorts. You can treat this as a supply zone. So every time it pops into here, you can add and then start scalping out as it drops. Now it's not even touching your supply zone. So now if you look at this as a short, let's say you shorted up here, seeing the weakness. Now you can say if it breaks your zone, so from call it 45.60 to 46, give it a little more room, maybe 46.10. You're looking at about 50 cents of risk. How far to the downside can you go? Keep looking left. So here's close from about 2 days ago. You closed from about 2 days ago, this area, 43. So now you have a much better risk reward area. I think this would have been a great short here. Risk reward may not have been fully there. If you did short it and scaled some out here, you could have scaled back in over here. With puts, let's see what we have. So if I was playing this, I would have done the weeklies, and if I'm playing it in the beginning of the day, I would have done 46s because I want to get a reasonable target. If I was playing it off of here, I would have played the 44s. So the 46s, when you look at it, here's that initial spot. $1.94 to about 250. That's 25%. Not too bad. Now let's see. 44. Right about this area. Yeah. About 12.30 or so. That's when it starts hitting. So right about this area. So call it about $1.15. And this stretch right here, 43, that's about 220. 220 right here. So about $2.13. So you just made 100, close to 100% on this move. Whereas on that first move, you're at a quarter. I think that's one of the reasons it's important to have a plan on something like this and have your levels drawn out too, where you can see them. If you can't scroll out and see where your risk reward is back here, then you need to just draw a line or a rectangle or a box or something, just so you can get that zone to find your scale out. Guy, anything else that you see on this? I fully agree, dude. I see all these people that want to diamond hands it, take it to the moon. It is not going, and no, it's just not going to the moon. And yeah, I mean, if it does, like, dude, on the off chance that AMC does start ramping up and there's some catalyst, I say just get back into it. Like, why are you gonna hold your money on this? Oh, and AMC got some downgrades too. Let's say I know these analysts said they weren't going to do any reports on the meme stock. but then they went and did them anyway.
Yeah, interesting. Yeah, I mean, I think AMC definitely already got a nice short squeeze, $70, so that's already pretty damn good. Uh, and I think the movement, they made the point of like, there should be more transparencies in the shorts, and all these hedge funds doing some shady stuff. So I'm glad they're shining some light on that. But to me, this is a trade, not hold type of thing. But
And there's gonna be a good chance that someone's gonna blame us for it, but I stand by our analysis of this.
yeah, like we're technical traders, right? So it's not like we're gonna just hold on to something based on some potential of a short squeeze.
I'm a trader that happens to invest in things. I'm not an investor that trades. What do you want to do next? You want to do BBIG? Because I guess it was kind of a meme.
Yeah, I don't even know what this was. I don't know. It just got squeezed.
Dude, I don't even know what this is either. I have no idea what this company is. Uh, what I can tell you is that I know there were a few people on Twitter that were pumping this. I know on this day, 8/20, and this is one of the reasons you have to kind of zoom out. Um, right here, this big pop was all call flow that came in. And then and it's all like this is an options expiration day, 8/20. So now it's all so it was all September and October call flow that came in, and then it just kind of moved sideways, and then here you go. I know there was more call flow on this day, which is why it popped up. Um, Same thing here, just sideways, 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 and then finally again 8/26. These little bumps are people starting to notice this and buying calls, and so finally on this day it popped up, and I know once again there was call this ramp up right here was all call flow. And I want to say it was the same thing like AMC and GME. It was a Wall Street bets gamma squeeze style play. Unfortunately, I don't know the fundamentals of the company, but we can look that up real quick. Let's see. Vinco Ventures. What is this? Operates as a consumer product research and development fulfillment company in North America. So toys, plush out homewares, electronics to retailers, distributors. Kind of sounds like a let's say kind of sounds like the supplier to like a Macy's, you know? Does that make sense? Like one of those big department stores.
Yeah, like some sort of like apparel type of thing. Yeah, I mean, I don't know what this is.
Info. Oh, is there like a wiki page on this? Nope. Oh, here's one. No, this isn't the same thing. Yeah, so I'm willing to bet the people that were buying this, they don't really know it either. I mean, I'm sure people looked it up, but anytime I see a company where they specifically say stock data, SEC filings, I'm always kind of weary about it because you don't see bigger companies put things up like this right here.
Yeah, that's true. They usually have like investor info or something. Like,
Well, I mean, I'm thinking of like Apple, Microsoft, even what GameStop, AMC, no, AMC theaters. You don't even on these meme stocks, you don't have a you don't have something that talks about the stock on the main page. You go over here, don't have something there.
scroll the way down. Usually the investor stuff is like at the all the way at the bottom. Yeah, like around here.
So you have, well, all right, affiliates, careers, accessibility, uh, uh, honestly, it's probably in one of these corporate, yeah, investor relations. So you actually have to kind of search around for the stock market portion of it for investor relations. Same thing with, I'm willing to bet it's the same thing with AMC. Yeah, Investor Connect. It's down here. Whereas this, it is prominently displayed. Even Clover Health. I don't think this is like the greatest stock. I think fundamentally the company might be good, but the stock kind of took a hit. Developers about broker investors. So even this one, yeah. So I think personally, I stand by what I said. Like when I see something like this, I think the company is more after a stock price than an actual like fundamental reason to exist. You know?
Yeah, that makes sense. Like it's like the product and the business should be the most prominent, not invest in us.
Yeah. Uh, so back to the chart. I mean, on this day, I remember this day because I want to say I traded. Um, I scalped some calls up into this ramp up. Of course, as usual, I didn't hold it because if I had held it, I would have made something like 200% off of these calls instead of like 50%. You know, that's trading. So I remember after this day, because of this drop, it ended up getting on SSR, short sale restriction. Because of because of the short sale restriction, I think that's why we had this nice little ramp up into today. And today it made its high off of this. Two halts down. Just like I said with FCUV, when you have more than one halt, it's not a good thing. It typically kills the momentum. And with FCUV, I think we saw like what, four halts or something, five halts until it started dropping. This one you only get two, and then the next one's a down halt. And so that's why I'm saying with these halts, you don't chase. Because if you had chased, if you had, let's go back to this one. If you had been playing this one, and then after this is the third halt, if you had chased here, then you would have been rewarded for it. And if you chased here, you would have been severely punished. This is a 11, call it 11.50 to 10.20. That is a $1 drop. And I'm willing to bet because of how fast this candle was, there's no way you would have been stuck in this halt wondering, okay, at what price can I get out now? I know you've seen a lot of halts.
Yeah, no, I agree. That's why I always say if a stock is strong, there will always be more chances to get back in.
The thing with this is that so this I want to say this should be the last day of SSR. Let's see if we can. Let's see if I can pull that up real quick. Let's see. That was a website that I used. It was a website I used for it. I think this is the one. There it is, VBIG 831. So that was yesterday. Hmm. Well, I want to say this should be the last day of SSR. Previous day, end of the following trading day. So yeah, end of the trading day, short sale restriction is off. So what happened with this is after the drop, once again, it barely touched 200 EMA on the 1 minute, tops out. After that, it starts doing this little dance on VWAP, where it actually, as it falls, it keeps coming right back up to it. Now you notice how it starts forming this zone right here, a demand zone, if you will. And it's a small one on the 1 minute time frame. So it's not once again, it's not the strongest. But it's a good area to get long, and you know that your risk right here is just below this area. If it doesn't hold this area, I would say get out right about there. Few pennies. Not your risk really shouldn't be that much on this. If you really want to, you can have a re-add on 200 EMA and then risk a little bit more. The reason I say it shouldn't be too much is because I'm looking at this halt level right here as resistance. And what happens? Right there at that resistance, it starts failing out. It pops up a little bit, comes back, pops up, and now you notice how the second pop is on lower volume than the first pop. It's first pop, second pop. You can see the volume die off. So that in and of itself says that the buyers aren't there to keep this up and drop right to VWAP. Now, once again, if you want, and this is the example of an area where you may have to just scalp out from here to here if you were in it. You could get in on VWAP here too, but then the second it breaks, your risk level shouldn't be too far below this. There's your risk level. So nice. Now look right here. Once again, if you look left, scroll back, you're in this area of support. Lower, so higher low, pop. Now what happened here is they released an 8K. Guy, I forgot what they actually said, but I know it was what they said was redeemable at a price of $9, I believe. Is that correct?
Yeah, it was warrants for like $9 or something.
Yeah. So after that, basically what that means is that the stock is going to be diluted. Everybody gets out. Now, a way to short this if you don't have shorts on this is selling the naked call, which is very risky. And that's what I did. I sold the naked call here. I believe I sold the 11s and collected 30 cents off of a $2 sell. So two sold at $2, covered at $1.70, and then brought right back up. Now the thing that you have to watch out for is it's no longer on short sale restriction tomorrow. So we're gonna have to see if short sellers and profit takers are just gonna want to get out of this. That's all I got for this one. I mean, oh, I also have the calendar spreads uh, to eat away at the theta for the options that I sold. Those went to 100% today, by the way, guy. I mean, even if you collected like 50%, that's still like good return, you know.
Anything that captures data decay and like IV crush is pretty solid.
Yeah, I would go into exactly what that calendar spread is, but that's for people that subscribe. Anything else on this? I don't think there's really much else I can talk about on BVIG.
Yeah, no, I think that's it. I think it's probably gonna cool off now. I feel like a lot of these short squeezes. I feel like they don't last as long anymore. Like GME lasted like a month or something, and then AMC lasted like a couple of weeks, and then support.com lasted like just a week, and now VBIG is like a couple of days.
GME lasted a couple months, and GME lasted like a week. Yeah, it was 4 days. 4 days of short squeeze.
Well, you gotta count the squeeze before that too. Before it just launched.
Does this count right here?
I counted because the all-time highs before that was like $20-something, and then it just went to 40, and then consolidated a little bit, and then just blast off.
I mean, I also guess that this is part of the squeeze. The short interest came right back into it on this jump. This is part of the squeeze. Short interest came right back into it. This is now a new squeeze. And here's the latest one. Yeah, I guess you're right on that. I think this one was an interesting one, support.com. Because this one actually is a legitimate company. And the way I can show that one of the simplest things I like to do is just put into Google, see what pops up. You see this right here? Number of employees, 780. Founded December 1997. These guys have been around for a while, and they actually have employees. So while this stock price at $60 more than likely is not reasonable for the company itself, it's still an actual company. Had an IPO. Yeah, the IPO kind of dropped a little bit. People started coming in, and this was definitely not organic. It was a gamma squeeze with options, I believe. I don't think this was actually a short squeeze, but
I think like at one point had like 60% short interest.
did it? If it collected 60% short interest after only being open since March, that's actually pretty incredible. I mean, I didn't even have shorts available on this on Fidelity. Let me see if I can. Let me see if I can short it. Why not? Does E-Trade have it? You gonna go? No, we can't. We can't see if it.
I think you might need to change. Wait, do you have to change the day to like good to cancel or something?
Nah, it's a limit. It should. There it goes. Hard to borrow. Yeah, hard to borrow. Ooh, 95%. 95% borrow rate. I mean, yeah, yeah, that's a lot. And guy, you're gonna have to blow this out right here. You see this? There's no need to show this. Anyways, with support, it's an actual company, so I think inevitably this may pop in the future. Versus, and I also know it was very similar to BBIG in that I remember there was a lot of call flow in the previous days. Right here, this pop call flow. This right here is all call flow. And then, oh, there were definitely people in it, but a lot of this stuff back here was call flow. Like there were a lot of calls being bought into this. And just like BBIG, they only had monthlies.
Yeah, yeah, that's one I have on fees. Yep.
So yeah, there's that one. Um, what else? What do you think another ticker? Let's do QQQ real quick. So I know I'm just gonna do it on this. Uh, I know QQQ. I said in the Discord, if it breaks 382, you can take it. Uh, yeah, to the upside. 382 right here. Now the reason I said 382. Where is it? Let me go back to that. Uh, I'll see exactly what I wrote.
I mean, for QQQ, when Ken mentioned like that put, I was watching it, but it just kept like the whole lunch hour, it just kept like turning sideways. I'm like, I'm not gonna be able to sit and watch this. I have a meeting coming up, so I'm like, let me cancel my put order. I had it like 98 cents for 381,
Oh, yeah.
and I was like, oh, I'm just gonna cancel it. Don't think it's gonna get there. So
Yeah, Ken hit that on the spot. Okay, I see what I'm missing on E-Trade, and I hate that E-Trade does this. So let me see if I can pull this up on Thinkorswim or one of the other ones real quick. Actually, I got it. So the problem with not Thinkorswim, the problem with E-Trade right now is that these dudes don't have uh, pre-market past when you can trade. They start their pre-market right here at 7. So the reason I was missing that, or missing my logic behind it, was because I wasn't seeing the pre-market time. Now let me see if I can get Yahoo to actually cooperate a little bit. Here we go. Nope, I don't think it's showing me extended hours. There we go. Extended hours. Okay. So now this looks much better on, let me see if I can change this to maybe 5 minutes. I think it looks better on my fidelity.
If you want to use a charting, like a charting web page, I like tradingview.com.
Let's just use TradingView then. Let's just do this. Do 3 minutes, and hey, where's the thing to show extended hours? Extended hours. Okay, there we go.
Yeah, you got it. And TradingView, you can continuously scroll all the way back, which is what I like.
See, I don't think this is really showing it. Like, it's not showing what I saw. Let me pull up Fidelity, and I'll just. Or actually, I know Thinkorswim does it. I have Thinkorswim open.
Are you trying to look for like 4 a.m. or something?
Yeah, I'm trying to look for the 4 a.m. chart. And I know it has 4 a.m. Here we go. So this is what I'm looking at right here. So it was this right here that I saw as my level. And what I saw, 382 is what I saw, what I mentioned. So I was looking at these candles. Now, personally, I think it looks much better on Fidelity, but I don't have my Fidelity open, so that's okay. But if you draw a line right at 382, put that in. I'm not as good with Thinkorswim as the other ones. So put the line in. Now let's zoom back in 1 day, 1 minute. Now you notice how it pops up or right in the morning. This wick hits 382 almost on the dot, comes right back down, and then it ramps up. So what I would say is at this 382 level, you have two options. What I see is volume kind of ramping down. The MACD is still going up. So what I see is two options. Now this is the 1 minute, this light blue line is the 1 minute 9 EMA. What I've noticed is on a pop like this, it drops back to the 1 minute 9 EMA. If this doesn't hold, then the 20 EMA is next. If one of these holds, there's a good chance that it'll ramp right back up, especially if MACD is in your favor. So what I would say is you can kind of scale into a few calls here. And then as it starts to make this push past 382, you can then start scaling into a few more. Now, of course, like when you break 382, you only have this much room left. That's why I would say, if it were me, if I played this today, I would have taken a few right here, scaled in a few up in this area as it broke, probably on this candle, because this candle forms over 382 or starts to form over 382. And this isn't it's not a hold it. It's not a this will continue to ramp up because QQQ basically this was the all-time high at this point. And if volume doesn't come in, you can't expect it to actually break through. And it's not necessarily volume in QQQ, it's volume in the components of QQQ. So looking at the options, and personally, I think it's even a really tight stop loss. I would not play the 0 day on this one. I would play either Friday or this is Tuesday or Tuesday. And what I'm looking at is so it's a 382 call that I would be looking at with QQQ. Because with SPY and QQQ, I tend to go at the money, whatever is closest to the money or at the money. So this is right above 381.50, I would do 382. If I took it right off the open, which I typically don't do, I would have done 381. So yeah, go ahead.
Yeah, no, I was gonna say, yeah, same thing. I only go like $1, $2, $3 off of what's this trading price.
Yeah, there's the thing you have to remember with the options on the indices on SPY, QQQ, IWM is that the IV is pretty low, and so if the IV is low, you don't benefit from getting out of the call money, which I'll show in a second. So on this, on the drop right here, next candle. So that's these two candles right here. This is basically, I would have scaled in a few here, and then same thing on this candle, 945, scale in a few over here. And I'm not looking for much. I'm not going to hold this for too long. Scaling here, you've got about 150. Scaling here, about 175. Scale out, $2. And that's it. You're just done with this. And if this happens to have broken down right here, that's it. It's just a cut.
Yeah, I agree. I see that. That's definitely a critical line, like one of those levels you gotta draw.
And then if you zoom out, I didn't take a look at it on 3 minutes, but on 3 minutes, it's kind of the same thing. You see the break here, the second it breaks, take it. Or the second it holds here, take it. 5 minutes, I'm willing to bet you're not going to see too much. Yeah. I mean, 5 minute, 3 minute, and 5 minute, it's great for when you're trying to get quick, or not quick moves, when you're trying to see a prolonged trend. The 1 minute is great for these type of scalps.
Yeah, I can see that. If you can get the volatility off of that 1 minute, you mean scalping all day with that.
Yeah. And now, like, let's say hypothetically you go out to the 385s, and you notice the 385s, I mean, they moved 45 cents to 75 cents. It's a good amount, but at the same time, if you look at the volume that it's trading, look at how jumpy the chart is versus the 382. There's a lot more volume in this. There's a lot more liquidity, and this is especially true with these with the options when it comes to the indices. And even then, let's say like you hypothetically missed your exit here, called it to here for some reason, and then sell out there, you still make somewhat of a profit versus this. If you scaled in here, you'd be lucky if you get this price break even for the next scale out, or for the scale out here, assuming you missed all of this. I'm just not a fan of going that far out for these type of moves. And I know one of our other mods, Ken, played puts right here. So what I see in QQQ is off of this opening all-time high drop, and then it starts bouncing off of VWAP. You have a bounce. This is, I basically consider both of these a bounce. Another one, another. Now you start holding 200 EMA, 200 EMA, 200 EMA. Even this little spot right here, you can consider that a hold. But at the same time, what you notice is this is a lack of volume, and it's not pushing anywhere. It's just going sideways. You notice it keeps hitting up against 382.45, call it 382.50, but then it can't make that break. So once again, this all comes down to risk reward. What did Ken play? He played the 382s. Yeah, so he does the same thing. Yeah, 382, and then he played the 381s also. So let's just stick with the 382 puts. Uh, Now I know the put side is always going to be lower volume here. The 381s, yeah, the 381s are actually a better pick than the 382s. Uh, so the two ways to play this is on every one of these little pops. I wouldn't necessarily get in here because you don't know what it's going to do, and you can see the way it played out where on every single one of these pops. So this one was at 1050, so we got 1050 right here. You can get a good 30 cents off of it, simply playing this range from here to here, these drops. Play the puts, play the calls, puts, calls, and they're all quick scalps. So you should not be holding these because you can see how it's trading in the range. So once it hits, what is it? It's 13, so that's about 130. So 130, it peaks out. Now, if you're playing the range, chances are you're going to get rid of it about right here. Yeah, about 1420, so about right here. Like, yeah, because you're assuming that 200 would hold.
Yeah, I think yeah, definitely the since you saw a whole like that VWAP the whole time during lunch, like once that breaks, it's pretty good.
Yeah, so once the 200 breaks, and it's not, the 200 didn't break. It didn't break and then come back and retest. It just broke. So when it just broke like that, if I was playing this range, I probably would have gotten rid of it right here. And then when it broke, I would have scaled in a few right about here, 14, 17. So that's about right here. And then at the same time, when you look at VWAP, it starts hitting at 1422 about 2 minutes later. So you're up all of like 3 cents. And now you know if it bounces back to 200, good chance it'll just start ping ponging back and forth. When it breaks, you have this nice 50-cent move. Now, after that break, uh, this is where I probably would have scaled a few out, and then you. This is one of those. How good are you at playing the pops? Like this right here is technically a pop. That's that corresponds to right here. Goes up, scale out here, goes up. Let's come back down. Now, how good are you at playing this move? And that's what playing QQQ and SPY really comes down to. I got another guy that I trade with. Me and him had the same idea. If you start seeing QQQ or SPY trade in this range, start scalping in this range. 10 cents, 30 cents, it adds up.
That makes sense. But then, would the decay, would data decay take away like a penny an hour or something?
Yeah, and you can see that right here, how like even though the range stayed, you have this pop, and then you have this pop, even though the range was the same. Then you have a lower pop, and then finally this final spot, even though it was in the same spot, ends up a whole, what, 20 cents or so, 15 cents lower than this. That's why that's what happens when you see chop like this. Chop like that, it just kills options, especially if you're on something like Tesla.
Oh yeah, with this crazy spreads. Yeah, I don't know how if it was the option trade sideways, I wouldn't even know how to like pick the right prices. Like I'll always have to keep checking that site. I would just, for me, I'll probably just get the shares just so I know like which.
See, if you're gonna go shares, I would just go. If you
Yeah, like one of those like leverage, triple leverage type of shares on there.
yeah, like this one right here, TQQQ. I mean, you can literally do the same thing. Scalp from here to here. Well, you don't know that the range started there, but on the VWAP bounce, scalp long, short, long. Now you know this is a resistance. Take it off. Go short. And there are people that I know that get really good at just playing these little like ping pong in a channel type of plays.
Nice.
Um, I don't know what else. The only other thing I saw that was interesting, Apple had an all-time high today. I know I played the 155 calls and got rid of, I want to say half of my calls. Did I get rid of half? So what happens when you have this many positions and you don't have your brokerage open? Yeah, I think I got rid of half of my Apple calls, uh, the October 155s, and I'll re-add them once it gets to about 150 and holds at 150 level, or if I see some signs of Apple basing out maybe at 152. Like it looks like it established some kind of support here. I see support right there, pre-market. Once I see it basing, I'll re-add the October 155 calls. Um, but what I saw in Apple that was interesting, let me pull up a bigger chart. Was this nice little M pattern right here. Bounces. Yeah. So, I mean, this thing ran straight out of the gate, and there was call flow left and right into this. The M pattern I'm talking about, look at the bounce on VWAP. Now it starts going up, and it's not the cleanest on the 1 minute. Starts going up, comes down, starts going up again, almost gets to this high right here. You see, it's like this candle is a few pennies away from this candle right here. And then right to VWAP. So where's your M?
So basically just like a double top pattern.
Let's see if I can get a better line. Is there a line? All right, well, they don't have it. Yeah, it basically is a double top. I don't know if you can see that DM. Let me just do it on paint real quick.
I mean, I see it. I mean, probably even easier if you did it on 3 minute or 5 minute,
Oh yeah, yeah.
because you can see it a little bit more steeper.
And there it is. Nice M pattern. See on the 3 minute, this is where I'll say like I like the 3 minute and the 5 minute because it cleans up that noise so well that you can see this a lot clearer.
Yeah, that's what I've been saying all the time about the 1 minute. There's too much noise there.
Yeah, and on the 5 minute, I mean this M pattern is very clean. But it also shows, I mean, it shows right there like why you have to go, why you should look at all of these time, all of these time frames. Not just you can't just look at one, you can't just look at 3 or 5 and say, oh yeah, that's the best. And then if you scroll out, a lot of people like using the 10 and 15. If you use, yeah, if you use the 15, you're just gonna see this nice little resistance level right here. You see, like you're not gonna see all the little individual candles. You just see resistance, which I guess you come to the same analysis. You just don't see that nice clean M pattern, which is another way for saying you're right, double top.
And that's a bearish pattern, so
Yeah. So I know on these the put went, I want to say 100% from here to here, and this was just a nice clean fade. Like you can't ask for a better fade than that. And what would I have done? I would have done either the 155s or the 152s, the weeklies. So the 152s off this double M started at about 30 cents, ended up to 96, and the 155s $1 to $1.70 to 2.70. My bad. I think the only other one that I saw was Amazon, and this is a tough one to play.
oh wow, it gave back a lot today.
The thing with Amazon that I saw, you have to remember, like, so first off, it's got this nice gap from here all the way to here, and I'm not counting the wicks. I think you count the wicks, 35.79, 35.80. If you don't count the wicks, 3,600, and it starts at this. This was basically the earnings collapse, and it wasn't really a collapse. I mean, it dropped all of like 8%, I believe, which it just seems like a lot because we see 300 points from here to here, and we think, oh yeah, that's a lot. It's less than 10% of where it was from here. It really wasn't that big. The good part, though, is that once it hit right over here and it started coming up, you can see how it developed this nice consolidation right here. And then what broke down a few weeks ago now turned into support. And the thing with Amazon is that once it got into this gap, once it broke these candles right here, so that was on this day. Once it broke this area, it just kept going up. The problem with a stock that just continually goes up is that you're gonna have a pullback. So you had that many up days. I think that was four or five up days in a row. Yeah, we had two sideways days, and then 1, 2, 3, 4 and then this is the 5th day where it gapped up. And even today, it's still a green day, but it it uh it closed lower than it opened.
Yeah.
So it's the same thing, just like Apple, right here at 35.25. Nice little double top. Now, albeit this is a little more risky because the options premiums are just ridiculous. And if it goes the wrong way, you will lose a few $100 in the span of like in like a minute, 2 minutes. But if you get it right, you're going to gain a few thousand in the span of, that's about 30 minutes.
High risk, high reward.
And Amazon and Apple are two of the biggest components of SPY, of S&P 500 and NASDAQ. I'm just saying, I'm getting all right, there we go. So when uh, when QQQ started collapsing or started failing out, if you turn to something like Amazon and you see it mimicking weakness, you can now go puts on this. Now, what would I do? Once again, I'm not going to go wildly out of the money. Like I know some people would look at like 3,400, see a few hundred, and yes, you would make 150 to, what is that, 282 on like the first leg. If you're really patient, $3. But then you see like dude, from here to here, that's 80 cents. If you go 34.50s, $3, $8, now you're actually running more into that 100%, 200% range. Still, the drop to, what is that, $8 to $2. Now look at 3,500s. 3,500s, if you take the risk right here, and then say your stop loss is a little bit higher, maybe there, and you get in, let's just say right at about 12, yeah, you can risk maybe to about $10. So risking 200, but even then, I would probably say you should be risking about to 9, if not 8. If this thing goes up from $12 to 27, drops $5 off of this little pop, but you're still up 100%. And not just that, you're already $10 in the money, which is what, when you're in the money with options, you start converting from extrinsic time value to intrinsic value, which obviously holds a lot better. And then once you start getting up here, your risk, yes, your risk is more than some of these wildly out of the money puts, but your reward, I think, is so much better.
Oh, that makes sense. Yeah. Yeah, so that's why it's better to play like closer to it in the money for like scalping day trades.
Yeah, I mean, I like playing a few strikes out of the money, few strikes out of, or something that's realistic that it can realistically hit. I think me and your god uh, on on Monday, I believe, we played the 34.50s either Monday or Tuesday. I forgot which day it was. Guy, do you remember?
Which one?
The Amazon 34.50s. We played the 34.50s, I think on Monday. Yeah, it was on Monday. Right. Yeah, right off of this. nice little curve and hold a VWAP, we played the 3450s. And the reason I played that, you can say, is wildly out of the money, except it's not, because it realistically has already, it's already in that gap, the earnings gap. $34.50. That's right here. And the break of resistance, or the break that I was looking for, was 33, about 33.75 or so. And you go over here on Monday, right there, 33.74. So I think I got in, I want to say, like right around here somewhere. And once it breaks this 33.75, it's in the gap, which means it can go. And those 34.50 calls, you can tell a few here, got a nice top, closes a little bit off the highs for the day, but then the next day runs again. And then today opens up with the Qs on highs. And at this point, I'm $70 in the money. And that's I think that's all. That's like all the trucks I have. I don't know if there's uh anything else like that I really saw as like something big that I really wanted to play.
Yeah, I mean, I didn't really play much today. All I did was that WKHS short. That was pretty much it.
Oh yeah, workhorse.
Yeah, that yeah, that's all I did today. Wednesday is my meeting day, so I usually don't do much.
I think workhorse. I think you hit it perfectly off of the news and then bounce and then play the weakness at 10. Play
Yeah, I was
that
getting
that
scared. I was like,
11.
if this thing goes above 10, I am.
Yeah. Um. Yeah. I mean, today was kind of a slow day. Like, yeah, there were plays to be made, but really until like end of day, I personally don't think. I think you could have gotten a few scalps. I know I did QQQ. What else did I do? GME. I didn't do calls on that once it broke 220. The 220 was a level that I had. 220 held, 222 broke, and then you had this nice candle for a good scalp, about $5 on the move. I don't know what the options did. Uh, yeah, that was pretty much it. I know Netflix had a CNBC pump that was this right here. I think these are kind of hard to play because, well, the stock was strong, so you definitely, I know I played a few, scalped into this. Uh, the stock was strong to begin with, and the CNBC pump just kind of took it from here to pretty close to all-time highs. But I also think it's hard to trust the CNBC pump because you never know if it's going to break down here or make another leg up higher.
I was wondering if Netflix was gonna test its all-time highs.
593 is all-time high. 593 and some change, and this hit 591. Yeah. Roku, I know, had a coiled spring. I didn't play Roku, but I think this pattern right here where it held the 200 EMA pops up, comes back, test. I think that would have been a good ad, but this was not on my radar until a little bit later. That's all I got, dude. If you want, you can cut the recording. You know.